Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 8th of January 2023, and we're reporting on what happened to gold and silver prices, equity markets and oils last week, and what we envisage is likely to happen to precious metal prices this coming week. Now, this video is a repeat of the one that we put out yesterday, so obviously if you've listened to that, there is no need to listen to this one. Having said that, a quick reminder that we were planning to produce our annual forecast for gold and silver prices. We haven't done it as yet, and it will be published next weekend. Part of the reason for that is that there are some technicals that we have to still fine-tune, and also we wish to see the CPI data that's being announced this week. That will then give us a broad platform on which to base our estimate. Meanwhile, let's take a look at what's been happening in the world of precious metals. Now, before we look at gold and silver, we're experimenting with new intros and outros for Illuminati Silver during January. Do let us know if you like them, dislike them, or prefer the old one. Gold rose $42 last week, rising from $1,824 to $1,866, having hit a high of $1,870 and a low of $1,824, a rise of 2.3%. It did well. In sterling terms, it finished the week at £1,543, that's up £35, and in euros it closed at €1,754, that's up €48. Silver, though variable last week, didn't perform quite so well. It actually fell 13 cents, falling from $23.98 to $23.85. Having hit a high, though, of $24.56, so that was really most promising, and a low of $23.13, a fall of just over 0.5%. In sterling terms, silver closed at £19.72, that's down 11 pence on the week, and in euros it closed at 22.41 euros, that's unchanged. The gold to silver ratio, of course, as a result, rose from 76.1 to 1 to 78.2 to 1. Now, the difference between gold's high and low was $46, and the difference between silver's high and low was $1.43, much larger than the previous week. Now, we did predict last week we expected to see gold trade broadly between $17.75 and $18.75. And it did that. It traded within our normal band. We anticipated silver to trade between $23.50 and $24.50, with 23 and 25 as outliers, so we were expecting no more than a spread of $2, and as we could see, the spread was actually just under $1.50. And silver did in fact trade within our normal range for much of the week, but certainly traded within our outlier range, at both ends of the spectrum, in fact. Now, other financials, Bitcoin currently stands at $16,928. That's up $354. Equities were higher last week, with the Dow Jones closing on Friday at 33,630. That's actually up 483 points. The S&P 500 closed at 3,895. That's up 56 points. And the Nasdaq Composite closed at 10,569. That's up 103 points. So all up last week. Oils, though, were lower, with Brent crude closing at $78.57. That's down a sizable $7.34. And WTI crude closing at $73.77. And that's down $6.49 on the week. The dollar index was all over the place, in fact, for certain parts of last week. And it was quite lower midweek. However, it actually closed up 0.35 points at 103.87. Now, market data announced last week had some influence on the dollar and gold and silver prices. This coming week, though, could be even more important. So let's take a look and review what happened last week and why we think this coming week is crucial. There was a fair amount of economic data being reported, or at least important economic data being reported by the United States last week. On Tuesday, we can see the S&P manufacturing PMI, the final PMI, coming out at 46.2 in December, unchanged compared to the figure in November. Then on Thursday, we had the ADP employment report, actually showing some significant gains, both in terms of how it stood in November and against expectations. The initial jobless claims were also lower than anticipated, and the trade deficit was also slightly improved compared to where the markets thought these figures were going to end up. And the S&P US Services final PMI were also stronger, both compared with the previous month and also against expectations. What made quite a big difference then on Friday, which we mentioned in our report last week, is that the non-farm payrolls were stronger than anticipated, not quite as good in December as they were in November, but bearing in mind it's still 23,000 jobs more than the markets envisaged. The unemployment rate has actually fallen to 3.5%, compared with 3.6% in November, and the markets were expecting the rate to have gone up to 3.7%. Average hourly earnings, though, were slightly lower than anticipated. The ISM Services Index, though, actually came in slightly worse than the markets thought. And factory orders were also marginally down. Now, this has created a little bit of schizophrenia, really, because in normal circumstances, with such a strong jobs report, it does suggest that the envisaged recession is not going to happen. So as a result, we would expect, and this has happened on Friday, gold and silver prices perhaps to rise simply because, and particularly silver, particularly because the industrial demand may not be so adversely affected. However, what perhaps is not being taken into account is the fact that if the economy is still robust, depending on the next inflation figures, the CPI figures, will dictate what the Fed does in very early February in terms of interest rates. Based on the last few months' reports, if we've had a strong data figure for jobs particularly, then the Fed has felt it appropriate to be aggressive on the interest rate rises. At the moment, the market, it seems to be of the view that whilst interest rates will continue to rise for a while, the Fed will be more cautious about raising them to the same extent that they have done previously, which is why we saw a 0.5% rise in December as opposed to a 0.75% rise. We are not absolutely certain at this stage that the CPI, or inflation, has been sufficiently tackled. We'll await the figures. Now, this coming week, we have on Monday the New York Fed 1-year and 5-year inflation expectations, but perhaps arguably the more important figure for Monday is the consumer credit figures for November. Tuesday, and we will pay some attention to this, the Fed Chair Jerome Powell will be speaking in Sweden, and we might get some indication there, particularly now that the non-farm payrolls have been announced. Nothing scheduled for Wednesday. Then on Thursday, the important figures, the Consumer Price Index for December. And this is going to be, in our view, depending obviously what comes out, this is going to be the pivotal day for markets and precious metals. Yes, if the CPI is higher than anticipated, then we're expecting precious metals to fall. If it's lower, they may continue the rise, certainly gold, that we've seen this past week. And then on Friday, we have the Import Price Index and the Consumer Sentiment Index. Important figures though they may be, it's Thursday that's going to be the determining day-to-day for the week. So, with the CPI figures to be announced against the backdrop of a strong jobs report, Thursday, in our view, could prove to be a most important day indeed, and probably the most important for January, with many technical analysts now predicting gold having resistance at $1,883, which represents last June's 2022 top, and further much stronger resistance at 1910, which was last May's top, and with support lying between 1824 down to 1791, we can perhaps see where traders are going to pitch their bets. So for gold's range this coming week, we envisage a normal trading range between 1825 to 1900, though perhaps those limits may be tested a little, with an outlier range of 1790 and 1925. The technicals for silver suggest that possibly silver's struggling at this $24 level, but does have support close to 23 and very, very strong support at 22. This $22 level is where we would see the very bottom of our outlier range to rest. However, bearing in mind that we stated 4 weeks ago that precious metals tend on average to do well in the run-up to and into the start of a new year, we envisage silver's normal trading range next week to rest between $23 and $24.75, and its outlier range to rest between $22.25 and $25.25, just in case that report on Thursday is favourable. Now, we could see quite a disparity between silver's high and low this week as traders attempt to second-guess these markets. So much still depends upon the dollar value, which is why we're going to listen carefully to Jerome Powell to see if he actually gives anything away, particularly now we've had the jobs report. And we will watch those CPI figures very closely. Now, before we go, we're actually going to publish our 2023 gold and silver price prediction next Saturday. We had planned to do it this weekend, but there is some final tweaking we need to adopt before we publish it. So whatever you do, if you haven't done so, do subscribe and press the bell sign and stay tuned and watch out for that video. We apologise we cannot get it out on the weekend, but there's some final data that we need to correlate in order to give us close approximation as an estimation for this coming year that we can. Now, as mentioned at the start, we're also experimenting with new intro and outro graphics, so do let us know what you think, as we shall be experimenting with these during the course of January. And finally, if you are considering thinking about purchasing gold and silver, then do make contact with the Pure Gold Company. We provided a link below, who are only too happy not only to discuss short-term purchases and sales, but also longer-term strategies and retirement considerations. And even if you decide not to go with them, that discussion, we're confident, should prove quite fruitful. They'll also, if you do decide to invest with them, they will offer you a discount or special terms if you state that you were referred by Illuminati Silver, and we too admittedly will receive a very small consideration. Now, meanwhile, thank you so much for listening. If you haven't done so, as mentioned, please subscribe, press that bell sign, and finally, we wish you a safe, enjoyable weekend and a prosperous week ahead, and looking forward to an even more prosperous 2023. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.